It is September 5th, and this is, of course, the video log that takes 30,000 to a million. Today, I'm going to go a little bit back to the technical roots, and after I walk you through the account, I want to talk about Theta Burn, what it is, give you some examples, and perhaps you can broaden your knowledge base. So, if you're interested in that, just skip ahead until you see the screen again, where I'm just full blown up and I can talk about it. But first, let's go into the account and I'm going to show you how I've been doing. So here's the account. Um, I am at a loss on Friday. Today is Sunday. Tomorrow the markets are off in the US, but I'm sure around the world they're still kicking. In fact, I should probably check what Asia's doing at the moment with the markets, but I just don't know. I haven't checked yet. Now, what you're going to see is on the right here are my options positions first. You can pause the video player at any moment to try to find out my full positions. You'll see the percentage change on the right and the liability change on top in the dollar sign, the daily liability change. This will become relevant when I start talking about Theta Burn later. Now, I have some EBIX here at the top that expires soon. Then the JD, I'm going to go through it quickly. You can pause, like I said, at any moment to try to figure out all the information. It's listed, all of it is listed there. This is the ticker, strike price, type of option, expiration date, number of contracts, whether it's a buy or a sell. Then these are my equity positions. I only have 9 now. You can see the number of stocks I have and the ticker symbol up top. The number on the right is past the graph is the daily change in percentage and in dollar sign. I guess they started doing that now. So this is my entire account. This is daily performance. Let's look at the graph here. This is the weekly performance, up over 10 grand, almost 11 grand, which is a crazy boost, even though the last couple of days was kind of flat to down days. I've had a very good week. The month was looking really badly, but now because of this boost from the Chinese stocks, all is well in this account. The 3 month chart looks pretty ridiculously bullish. I'm up $23,000 in the last 3 months, and this is the year chart, which is $51,000 so far. Or I mean year over year. Sorry. Now that I've gone through the accounts, I want to take a little bit of a deeper look at the options plays, and I want to talk about I want to talk about Theta Burn, what it is, and give you some examples of where you can see how much you're losing or winning on average per day. Excuse me about the eyes here. This slide is very bright. I haven't figured out how to get good quality video without a bright light. Okay, so it's gonna be very bright. I might be winking at you a little bit uncontrollably. So, Theta Burn is an options feature, okay? Not future, feature. So, whenever you buy or sell an option, its value decays over time because as you come closer and closer to its expiration, it's worth less and less and less because there's time value of money, okay? So a dollar now is worth a lot more than a dollar 3 months from now or whatever. So that optionality in the future, the further out in the future it is, the more valuable it is. Okay, so it does mean no good. The options are not going to be very priced very high around the strike price a week from now. They're going to be priced very high like 3 months from now, 6 months from now, or a year or more from now, because a lot can happen in those weeks ahead. But in just 1 week, not much can happen. Okay, so the probability is that your premium that you're gonna have to pay, premium is basically the price of the option. The premium that you're gonna have to pay is not very high. Okay, we can take a look at that. Why don't I just show you here? Let's walk through it. I know most of my listeners here or whoever watches and follows this video log probably already knows this, but it's just for people who actually don't, for the few of you that don't. I just want to discuss it, and if you already know about all this, just look through the options with me and just to see kind of get an idea of how much Theta Burn each option is experiencing in my account. And maybe it'll give you a good reference point for your own trades. Oh, I forgot to do something about the account. I'll show you later if I remember. Okay, so let's take a look at the one of the options is going to expire pretty soon. Now I've sold this put here on eBix. Let me show you that you can see this. Okay, great. So it got devalued by 3 cents, all right, which translates into $3 because every every option contract is worth 100 shares. It copies them or it takes into effect the movement of 100 shares. So if this price here drops down by 3 cents, which it did, that translates into $3 of liability erasure, okay, which means my account goes up plus 3, or at least that's what this says, the value of my account. All right, so let's take a look at, let me see if I can, oh, you can't even see it. I can't scroll down that far. So what I'm going to do here is I'm actually going to unlock it and move it so you can see the Greeks. Okay, now at the bottom you're going to see some Greeks. Okay, these numbers here. Now I've done videos explaining all of them, but what you want to look at here is the theta. Okay, so this is the number that we care about the most, or at least I care about the most. So what this number says here is that each stock in this contract is going to decrease in value about 2 cents. You see 0.019, okay? So it's going to decrease about 2 cents per day. That's what this means. So if we multiply it by 100, since every contract is 100 stocks, that translates to about $2. So by selling this option, okay, I can expect from this day forth to gain $2 of liability erasure for each day. Okay, so if I have the capital up front, let's see what the expiration date is here, 9/17. So this expires on September 17th, which is about 12 days from now. And so if I had the capital up front, and this requires $2,250, I can tell that because of the strike price of the option. The easy way to do it is just to move the decimal point 2 spaces to the right, so you can tell basically what the required capital you're going to have to put up as a collateral in order to sell this option. This might sound a little complicated, but basically what it is you need $2,250 into your account, and then you go over here on the options button that you probably couldn't see because I shifted over a little bit. You go on the options button and you're going to see this screen here. Let me actually make it normal again. And so what you're going to do is you're going to go sell, put, pick a date, which is September 17th. And you're going to scroll down until you find what you're looking for. And it just so happens that I've just sold this one, right? So you're going to take a look at that. And you can see it's priced at 10 cents per share, which translates to $10, right? Because every contract's 100. So you're going to just basically sell that, okay? You press continue. It's going to ask for how many contracts you want to do. You're going to click 1, okay? And then the type, when you want this to expire, you're going to click review order, and it's going to ask you for the $2,250 collateral to put away in a lockbox while you wait until this option expires worthless. When it expires worthless, you collect that $10, pass go, collect $10, move on. Okay, that's kind of how it works. So back to the Greeks here. Oh, you can even tell the Greeks right here. Look, it tells you right away before you even make the purchase or the sell. It tells you how much this option is going to depreciate on average per day, and you can see that the theta is 0.0199, which is about 2 cents, translates to $2 over the course of a day. Which means that if you had, let's say, $10,000, okay, you could theoretically be making, $2 times, what is it? How many contracts? 4 contracts. So you can be making $8 a day if you had $10,000 by selling options like these. Let's take a look at some other examples. How about some JD options? So recently I've been actually, I sold a Baba put. Okay, let's look at that one. So Alibaba, it's $140 strike price. So how do we convert that into how much capital we need? Well, we move the decimal points 2 to the right, 2 times to the right. So that means we would need $14,000 up front in order to lock away, in order to collect income from selling this option. It's the first thing we gotta know. Okay, now let's go to the options wheel, view all options. Once we go to the options wheel, we go to sell put. We pick a date. Oh, do you guys remember what the expiration date was on that? Expiry date 10/8. Okay, 10/8. So let's see. View options, sell put, and then 10/8, October 8th. Cool. We scroll down until we find it, and there it is. Okay. It says over here, you can see the +1. That means I have sold one of those. Baba sell put. I mean, I've bought. Did I buy? I'm giving you misinformation here. Yeah, I have +1, so I haven't bought this. Sorry about that. Oops. So the market value is 173. So I'm actually losing Theta Burn. This is a good example because I'm actually losing, right, from Theta Burn, technically, on this. So let's go to sell put, just because it's green. But in reality, okay, we'll go to buy put. And we're going to go to October 8th, was it? We're going to find the option here. You can see that I've bought one of these. I want to click on it, and it gives us the Greek here on the bottom. All right, let me see if you can see it. Yes, you can. Fantastic. So here's the Theta. Look, this is a much higher number, right? This is almost 9 cents, okay? Which means that by owning this put option, I'm losing about $8 or $9 per day. I'm losing. It's burning. It's just disappearing, okay, when I own this option. So that's kind of the cost of ownership of this protection, okay? You can think of it a little bit like insurance premium, okay? A good way to think about buying puts is kind of like buying car insurance or flood insurance or any kind of health insurance, whatever. Okay, it doesn't really pay off until something bad happens, yeah? And you just keep paying premium month after month after month, and you hate it, and that's Theta Burn, okay? Buying insurance or paying insurance premiums. That's what that is, okay? So let's say you have health insurance that costs you $300 a month or something. They're pretty high nowadays. That's Theta Burn, maybe. So same thing with this option. In order to protect the position that you might have, you have to pay premium every month, protection against downside. So how does it protect you against downside? Well, let's say that Alibaba goes down, another $50. This option, its value is going to go through the roof. Okay, I'm not going to go over the mechanics, but its value is going to go through the roof. And it's up to you, actually. You have the power to cash in this insurance that you sign up for at any moment. Okay, so this is what you're paying $8 a day for, just in case this scenario happens. And this option is worth $173 now. It could be worth $5,000, $10,000, depending on how much Alibaba decides to crash from here. And that insurance, I can cash it in. I can buy more Alibaba with it, or I can just keep the cash and make sure that my account doesn't get damaged too bad. So that's in a short, sweet explanation. That's what Theta Burn is. Let's look at another one that I'm actually winning from instead of this depressing $8 loss per day. How about selling a let's see, a put on VIPS, on VIP shops. Okay, so I've sold a couple of puts. You can see that it says -2 over here, contracts -2. That means means I've sold, plus means that I've bought them. You can see the market value here is -336. Whenever there's a minus like this, okay, that means, and when I've sold an option, that means I'm looking to collect all that money in liability ratio. Okay, so as time goes on, time works on my side instead of against me. So I'm actually the one collecting the premium from the insurance, right? So there are risks with doing this. It's not just free money, right? You could get stuck with a really bad deal, having to buy a stock at a really high value when its value is really low. You could get stuck. Well, that's basically the risk. That's the risk. Oh, you could miss out on opportunity cost. I mean, if you had just bought the stock itself, you could stand to gain a lot more than just $336. Right? If the stock explodes to the upside, you're missing out on all these gains, right? With the same type of money that you put in as collateral. If you had invested in stock, it could double, but here you're only earning $336 for how much money do I have invested in here? Hello? Does not say what my collateral is. Well, anyway, so let's make the calculations. It's a $15 put. That means $3,000. So 15 times 3. I don't know why I can't see it right now. But anyway, so we're going to go to the statistics. You can see them down here, but let's just go to view all options. Sell puts. The date is 11/19. So sell puts November 19th. Okay. We look for the strike price, scroll down all the way until you see the 15 number right here. We click on that. Don't worry about all the other numbers right now. We're just looking at Theta. This $3,000 that I've quote unquote invested in selling a put is giving me $1 per day. All right. So that's kind of how it goes. It's not that much, but that's what it is. Perhaps I make better investments next time, but it was worth it at the time. Okay, they made a calculation and I thought that was a good idea, so I did it. Plus, I was kind of hoping it hits so I can collect some VIPS stock. Okay, that's kind of what happens when the other person who's in the other side of this trade purchasing this put has to do, right? It's they get the protection money from me, and I get the stock in return. I buy their stock, or yeah. So, or not, it's not their stock, but stock that's held, you know, whatever. I buy 100 stocks. Okay, I get 100 stocks if the strike price is above the current price when the expiration date comes. So let's say VIPS ends up at $10 on November 19th. I will have to buy them at $15. Okay, I got quite a bit of a loss there. So that's the risk of selling puts. And on top of that, my capital is not doing anything else productive, but I do get to keep that premium. So that's a little bit of a bonus. Okay, so I explained the same thing over and over again. Hopefully you got enough examples here. My account is doing well. I'm not too sad about it at the moment. I'm doing okay. I don't know if I'm beating the S&P 500, probably, even though we're at or near all-time highs. I've been looking at some other YouTubers lately, and fortunately for them, they're doing really well. So I need to like, you know, I need to ramp up or something, but I don't want to take any extra risk. But I'm really happy that people are doing well out there, and I'm happy when I see people beating me, but it just motivates me to try harder. So I got to do some more research, and I know I haven't been making videos lately. However, I do try to check in and update everybody on my account. That's one of my goals, obviously, is to have this long-term record of how the account's been progressing over time. And hopefully I get to that million at some point and I can start drawing money out of here for lifestyle purposes or whatever I decide to do with the money at the end. Okay, but the million is definitely my goal. All right, now with that said, I think I've talked enough. We've talked about Theta Burn. It's the same thing as paying for insurance every month on for protection, and you're paying insurance basically against stock market crashes or individual stock crashes. So I'm gonna leave you all right there. That was a lot of fun. Hopefully I didn't ramble on too long because I kind of tend to do that. Okay, peace out.